Now I'm joined by Ms. Sapna Narang, a practicing financial planner and managing partner Capital League. I'll be talking to her about the investment strategies young professionals should follow, keeping their advantages and financial constraints in mind. Hi. Ms. Narang, talking specifically about young professionals, considering initially most of them do not have the kind of income savings left after spending on the things that they have to, what should be their investment strategy, why and where they should start investing?
So to keep it simple, the main focus on the strategy should be just to get into the habit of investing. It doesn't matter what is the amount. Start with 1,000 rupees a month, take it up to 3,000, 4,000, whatever. Just get into the habit. See, it is a very common obstacle where somebody thinks, oh, what is 1,000 rupees going to get me, or what is 2,000 rupees going to get me, and then they just keep postponing and saying, when I have more money, then I will think of investing. But the way to go about it is that from your very first salary check, you should think of some number. Let it be just 500 rupees. And you should give instructions to your banker. So if your salary comes to your account on the 1st of the month, by the 5th of the month, automatically that 500 rupees should get debited and get invested wherever it is you have decided to get invest. And that is the most important thing. The amount doesn't matter. The different strategies don't need to overawe you, and you can think about all that at a later stage.
Right. So, but for somebody who has made that decision, who has made that transition and has started putting out that amount, a particular amount of money every month aside for investment, for him, where should he start investing first?
So investing is money that you put away specifically with the purpose that that money is going to grow, right? So if they need that money, say in about a year's time, then obviously they look at investments which are less volatile, which would be the debt investments. So they could be investments which would be going into some very simple kind of debt mutual funds. If it is money which they can easily put away for 2-3 years, they are slowly building, then they should look at some equity mutual funds. And for that also, rather than getting into too much of complication, they should just approach their bankers. Most bankers these days, at the front desk itself, you have 1 or 2 people. The bank already has a curated list of which are the top performing fund houses. Just look at any fund which has got 5-7 years of track record. Pick up that fund, give instructions to your bankers. Every month 1,000 rupees or X rupees should get debited, and automatically every month that money should get invested in that fund.
Now that you've decided that you're finally going to invest in the markets, what are a few of the hedging strategies you can utilize to make sure that the risk is minimized? I'm joined by Mr. Sanjeev Bhasin, an independent financial analyst, to talk to him about those strategies. Hello, Mr. Bhasin. So, Mr. Bhasin, for a young professional who does not have too much money to first of all invest in the markets, but if he decides to do that, there are fair chances, because of course market is subject to all kinds of risks, that he might end up losing that money. And for someone who starts investing, the first few steps decide whether he will stay the course or he will move away from it. So what are a few things which you can do to sort of hedge your bets?
Yeah, so Abhishek, see, investing is all about putting your idle cash to work. Firstly, you are creating an equity class called, an asset class called equities. Just as you have put money in fixed deposit or in gold or in real estate, you're also creating an equity class. Equity has limited amount of risk and reward. But the hedge strategy is clearly on 3 counts. One is the price. The price is no guarantee. It depends on what type of company you're investing, what are the fundamentals. So generally we always advise people to take up the top line stock indices, say Nifty in the case of the NSE or Sensex in the case of BSE, because these are well researched, well owned, and these are the blue chips of the country.
Is there any other strategy which new investors can keep in mind while investing?
Firstly, we would advise investors to start getting more educated on the market. Market is not an easy game plan, but it's not difficult also. On the other hand, like you pointed out, the best basket to buy is the index. We are saying the Nifty constitutes 65% of the market, entire market cap. It covers 23 sectors and there are 50 stocks. So you are buying IT, pharma, banks, metals, all in that basket. And you know, so your hedge is that if the rupee was to weaken, IT will make up, and if oil marketings stocks are doing well because of the fall in crude, those are making up their share of the gains. So gains and losses get limited in the index itself, plus you are not using your expert knowledge. Two is, if you are having some specific knowledge yourself on stocks or sectors, like we said, oil marketing companies have been been the bluest of blue chips in the last 3 months as a correlated to falling oil prices. Right. IT stocks have been resilient because of the weakening rupee. Right. And thirdly, we are seeing a cyclical recovery take place with the GDP now talking of 5.5–6%. So banks as a corollary to fall in oil prices, improvement in the finances of the country would mean interest rate and bond yields will fall. Right. And banks would be another core sector which could do well. So we suggest the Bank Nifty, which constitutes 6 PSU and 6 private sector banks, and which gives you an exposure on the entire credit scenario in the next 2 years.
Right. We hope that information helps you get started in the stock market. On that note, we will wrap up today's show. With camera person Sumi, this is Abhishek Singh for NDTV.